Take the first step towards online privacy. Get NordVPN.
Ready to hop in the 6-4 and cruise around the blocks? There's a storm coming to the underworld and the heat is on. Take over the blocks and call the shots. It's time to hustle or get hustled. What's it gonna be? Stay sharp. It's a dog-eat-dog world out there. Don't let them catch you slipping. Only real gangsters thrive in the dope wars world.
Hi everybody, welcome to the Crypto Rich channel. I cover crypto and politics. I'm joined by Tom Luongo of Gold, Goats and Guns and Rafi Farber from the Endgame Investor. And I've been wanting to get these two together for a long, long while because they're both sound money advocates, both libertarian, and I've learned loads from both of them about money, silver, gold, Bitcoin, and economics. Hey Tom, hey Rafi, thank you so much for making yourselves available.
Hey there, Rich, how are you?
I'm very, very well. Always thrilled to have you on, Tom, and you as well, Rafi. And Rafi, with you, I'm always thinking of some sort of excuse. How can I get Rafi on? How can I get Rafi on? I know, I'll get Rafi on with Tom. Now, I'd like to start with, Rafi, if you start saying where people can find you and your work, and then Tom, you start where people can find you and your work, and then we'll see if there's anything to talk about, because nothing's happening in the world at all.
Yeah, it's boring. Nothing's happening. Where you can find me, I'm the publisher of the Endgame Investor. It's 3 or 4 times a week I write, cover mostly the precious metals markets from like a monetary philosophy sort of standpoint, and I focus on a lot of the COMEX and what's going on, and really trying to get people to understand in a deep sense why gold and silver are money, and when you acquire them, you're not really investing as much as you are exiting from the system in preparation for its collapse. And if you don't prepare, then you'll be stuck in the system while it collapses. It's like when there's an earthquake, get out of the building. It's not the problem. The problem isn't that the ground is shaking. The problem is that whatever's on top is going to fall.
Yes, yes. And I'm going to have the link to I'm going to have links for you in the description below, and I invite people to go and check out Rafi. And also, you're occasionally on Arcadia Economics as well.
Yeah. Once a week, I do a show for Chris at Arcadia Economics. A silver report where I go into what's going on in silver specifically, and I cover the gold also, but he's a silver guy, so I go where his focus is, and we just review what's been happening in the week, and it's fun.
Okay, great. All right, Tom.
Hey, I'm Tom Luongo. The website's tomluongo.me. I do Gold, Goats, and Guns, and in that order. Like Rafi, I don't really believe that. I mix the markets along with the geopolitics and the domestic politics and try and fuse the two of them together, because in these markets today, in this world we live in today, they're hyper politicized. You can't really just focus on the markets without understanding what the people who are setting the policy, which affect the markets, are doing, and the plumbing of the system and everything else is all tied into that. So. Like Rafi, though, I agree that ultimately things like gold, to a lesser extent, in my opinion, anymore, silver and Bitcoin are your hedges against the collapse of an existing system that is unsustainable. It is not investing; it is savings. Yes. It is you're building a pool of real savings. I'm an Austrian libertarian from that perspective. So to me, your personal stock of gold or whatever it is, in this sense, tangible assets represent your savings, and that savings is what you use as a pool with which to build any investment portfolio and any defensive hedges you're going to build on top of that. So yeah, it's a core portfolio strategy.
And do you want to mention your Patreon?
Oh, sure. And I have a Patreon over Patreon/Gold, Goats, and Guns, where I write for people 3 to 4 times a week. Well, between private podcasts and private blogs covering the markets and the geopolitics. I just literally got finished with a post this morning for my patrons. We do that as well as we do a monthly investor newsletter with a bespoke portfolio ideas, a portfolio strategy to give people an idea of how to navigate all this stuff.
Yep. And I shall have a link. I'll have the links to Tom's stuff as well in the description.
Oh, wait, by the way, I'll just say a word about my Patreon. I forgot the Patreon.
Sure.
Tom's saying anything about his Patreon. My Patreon is slightly different. I do a once a week commentary on a biblical themed commentary on economics and monetary policy and that kind of thing. Not like numerology and magic or anything like that. I try to take the more logical perspective For just one example, for like I'm outside right now in my sukkah. It's the holiday of the Feast of Tabernacles right now for the Jews. So I'm sitting in my sukkah doing this interview. And I commented last week that that Sukkot, that the holiday of Sukkot is really a celebration of the fall of communism. So I'm interested in that kind of stuff.
Okay. Very good. Well, we want the communists to fall. We certainly don't want the new communists to succeed. And by that, I'm referring to the WEF and Davos and stuff. And one of the things I would say to distinguish both of you, in a way, or your perspectives, is the way I see it is, Tom, you do the macroeconomics and following the money at the large scale and everything in euro dollar flows and all that, which I've learned from you. And then, Rafi, what you tend to do, I think, is focus more on what's happening with the markets. I remember listening to one of your videos about, I think it was about, you were talking about backwardation in all the commodity markets. This was about a year or so ago. And how that was playing out and what that would portend in terms of supply chain. It might have been one where you were talking about nickel or something. So you kind of hone right in on something particular to see. Now, before we started recording, I'm just letting everybody know, we're recording this on Monday, the 10th of October, 17:30 British summertime we started. And before I pressed the record button, I said to both of you in jest, I don't know what we're going to talk about because there's nothing happening in the world today, is there?
No, not at all.
Not at all. All right.
I have officially created a new Russian holiday. It's called FAFO Day.
FAFO Day. And what does that stand for?
You know what FAFO means, right?
No.
Fuck around and find out.
Okay.
Ukraine. This is FAFO Day. This is what happens when you bomb critical Russian-built infrastructure, and you upgrade from, this is where we are.
Right.
And it can either be a day of mourning in Ukraine or a day of celebration for Russian hardliners, but this is where we are.
Oh my God.
Take your pick, because the Russians have now unleashed at least 3, possibly 4 waves of kamikaze UAV caliber missile attacks across the entire civilian infrastructure of the country of Ukraine. The first wave around 4 o'clock my time, because I started seeing stuff coming in through my the Telegram feed about 4:30, was around 200 caliber missiles in the first wave, and they're still going on as of 11:30 when I was working on a post about this, just to give everybody an update.
Yeah.
And where I thought we were going to go, because we need to know what that's going to mean. And then, of course, if this is happening on a day when the U.S. markets are closed and market liquidity around the world is a little light because there's no U.S. market, we're interesting that we're seeing some pretty solid or interesting moves in things like German debt, Italian debt, and whatnot. UK gilt market was crazy today. Yada yada. Gold is down $35. Right, gold broke down below about 1665 on the cash market.
Right? Wall Street's open today, though, right?
I didn't think they were.
No, it's Labor Day.
Columbus Day in the United States.
I think it's like a half holiday where banks are closed, but stocks are trading or something like that. I don't know. I've been out of the world for the last 24 hours. I've been on a holiday, so I don't even. It's news to me.
No, you're right, Darby. I'm sorry. Yeah, the Dow was open, but yeah, it is a bank holiday. So.
Okay. Well, listen. I'm gonna go from one to the other. Tom makes.
But Rafi, the bond markets aren't open. We're still getting the same exact quotes we got from Friday. So the U.S. bond markets, the U.S. bond markets aren't, but I guess the equity markets are. So tomorrow's going to be a very interesting day.
All right.
Okay. So Rafi, anything you want to say about what's been happening did you know about the attacks on Kiev and civilian infrastructure? Okay.
No, I didn't. I mean, I just turned on my computer like 45 minutes ago, checked my email, responded to different subscriber questions, etc. And I saw something on Zero Hedge that Russia was bombing a bunch of things, but I didn't think it was anything out of the ordinary, so I didn't look at it. But maybe it is.
It was a major escalation. The Russian Security Council held a big meeting.
Okay.
Their afternoon, just our morning. And Putin's response was, "We're done with the West. There is no potential to repair our relationship. It's over. And now, this is what you get for what you've done." And his response to the Kerch Strait Bridge was to not go any farther than targeting Ukraine. So it's going to be very interesting. Oh, and Belarus, by the way, is now officially in the fight. Because Lukashenko came out, the Belarusian president Lukashenko came out with very colorful words, as always, from that guy. He's fascinating, and said, "Oh yeah, no, the Ukrainians have been massing 15, 20,000 troops on the border. They were going to invade us." So, a lot of these missile strikes on northwestern Kiev came from Belarus. And the Russian Union state, and remember that Belarus and Russia upgraded their relationship after the attempted color revolution in Belarus in 2020 to that of the Union state. Like every time Victoria Nuland tries to overthrow somebody in Eastern Europe or one of the Russian satellites, she always winds up getting exactly what she didn't want, which is an upgrade of the Russian satellites coming back home to Russia, because they were hoping to get rid of Lukashenko, and what they wound up with was a stronger relationship between Belarus and Russia. Belarus has practically given up their own currency. They now all use the Russian ruble.
Wow. Wow. Okay.
Yeah, the Union State's a big deal, guys. Big deal. You attack Belarus, you're attacking Russia.
Yeah.
Okay.
Okay, a bit like Article 5 with NATO. Rafi, anything you want to comment or get caught on or ask about with regard to anything you want to say about the gold and silver markets?
Well, I again, in the very small amount of time I had to check in what was going on in the world before, I turned on Zoom, I did see that, gold is down, what, 30, 40 bucks, something big, down to 1670, and gold stocks are pretty much even. That technically that seems to suggest that we're skirting a bottom. We're just like skirting over the 1670 bottom, which is, a nice number. Right. It's around where the triple bottom was. It doesn't seem like it's going to break at this point, because if the stops were there, they would have already been broken.
I agree.
Who knows where they are? Who knows where they were? But if gold's going to sell out for 30, 40 bucks and gold stocks are going to be steady, then it seems like it's a good time to start going back in if you've got some cash to use. Yeah.
Now, I'm no argument actually that having not looked at the gold stock index, because for the most part I actually don't even look at most stock indices anymore. I mostly just follow the bigger markets, the currencies, the bonds, the commodities themselves, and that whatever the market. But if there's a divergence at this point, at this moment in time, then this is just a dollar piggy bank rate, as always, in the gold futures market. As at this point, the dollar's up strong today. It's the USDX is back up over 113. The euro is down back below 97 cents. The yen is pushing off 146. The British pound is down to $1.10. You can see the situation here. And I would think under a situation like this that, as always, we're dealing with a shortage of dollar liquidity worldwide, thanks to the Fed, and that's just laying itself out. So watching for divergences like Rafi just noted, in terms of where investors are taking their money. There are the people out there who are going, "Oh my God, I need dollars to get through the week," and then there's the rest of the people who are going, "Yeah, this is a buying opportunity." Yeah. Case in point, I bought gold this morning. Like, I've been up since I had to take my wife's not feeling very well. I had to take my daughter to the school this morning, so I've been up since 5:30. So like my time, so I've already been up 7 hours. I've already had a very busy morning. Like so.
So on that point, there's something interesting. That a lot of people in the gold and silver buying community, gold bugs, silverbacks, whatever you want to call them, we see this environment like, oh, gold's not acting as an inflation hedge, and we're all hot and bothered about it, and we're like getting all these negative emotions. But like, I have a friend that I learn with every morning, British guy, and he earns pounds. Like, he lives in Israel, but he works remotely and he earns pounds as his income, and he's having some trouble because the pound is down so much, and he's he just had a new baby, and he's have all these expenses and the doula and whatever. So he's like Rafi, look, I don't want to do this, but I need to sell some gold, and I had to tell him where he could sell it, because he's in a liquidity crunch. So like, it makes sense that some gold holders, even if they're not capitulating, they need liquidity, so they'll sell, and that's partly why the gold price is under attack now, because this is what happens.
Okay. As a layperson who doesn't have the depth of knowledge that both of you have with the money markets and gold and silver, I haven't looked at the price today, but I thought when I read about the attacks on the civilian infrastructure in Ukraine by the Russians, okay, this is an escalation in the war, and what happens is people rush to gold as a safe haven asset. But what you're saying, Tom, is that the world is so short of dollars that they're selling their gold.
Yes. See, in times past, there was always the war premium. They pumped they'd allow the gold market to run on news of war. Like if you go back to like the Iraq war and Afghanistan and things like that, you'd always see gold pump $25, $30, $40, the gold bugs. And then Martin Armstrong would come out and the gold bugs are always wrong because they'd pump $40 and then it would collapse. So you get a pump and dump in gold that would last 24 to 48 hours, maybe as long as a week, depending on what. Now it's the exact opposite because we're in a dollar crunch. Because look, the way I see it, 14 years of ZIRP, zero bound interest rates, zero interest rate policy, ZIRP, left the world biblically short dollars because so many people borrowed after the 2008 financial crisis overseas in dollars. This is why Turkey's gotten blown up, because Turkish corporates all bought U.S. denominated debt at good rates because they couldn't get good rates out of in lira. So they can get 6% on a business loan in dollars, but it was 26% in Turkish lira. Well, guess what? What are you going to buy your debt in? And as long as the Fed was going to stay at the zero bound, then this was a good bet. And a lot of people did this, and there's a lot of carry trades and a lot of financial structure that exists out there that's based on that old policy. Now with the Fed aggressively raising rates, now we've got people in serious trouble. We were talking about this on my private Slack server this morning, and about some analysis from Deer Point Capital about currency FX swaps and why this isn't that his disagreement with my argument that the Fed is actively trying to drain the Eurodollar markets, and in a sense, and I'm like, well, yeah, but the FX swap market, if you look at it, is actually confirming exactly what I'm saying. There's a dearth of Eurodollars. The FX swap market is decoupled from the ratio of the ECB to the Fed's balance sheet, and the markets are blown, and these old relationships are all blowing up. And he didn't have an answer for that in his article, but I did 5 minutes after reading the article. I go, this is why. So it's actually confirming exactly what I've been saying in many ways, that why we think the Fed is raising rates is not necessarily to put the kibosh on inflation. What the Fed is doing is regaining control over its own monetary policy in an era where they don't have to have where U.S. debt is no longer indexed to LIBOR, and the markets still haven't adjusted to all of this. Gold is just caught in crossfire, and so in an illiquid dollar environment, gold is the easiest thing for people to sell. It just is. Either right. You look at the spot market or you look at the futures market, and so especially in the West, where the futures market is all paper. And people use it as a dollar piggy bank or as a dollar hedging strategy. It's clear that that's the one thing that they're always going to sell. Now, the question I have now, and Rafi, I'd love to hear what you have to say about this, because I don't follow open interest on the LBMA. I don't follow the COMEX and whatnot, which is the following. I'm worried about volatility washing of liquidity in these markets. Like, I'm seeing it all over the oil market. Like, we have people who are in power, openly hostile to the price of oil. So if you want to wash out the small players in markets, then the easiest way to do that is to whipsaw the market against its fundamentals, right? Mm-hmm. So we're seeing that in oil. The oil's fundamentals are unbelievably bullish, and yet up until last week, oil was in a 3-month downtrend with massive amounts of volatility, wiping out guys wiping out spec longs on the high and the low, on the long and the short end of the leg. And I've heard multiple reports of people going, you know what, I'm out. I'm not going to trade oil anymore. Yep. So the big question now is if they're trying to volatility wash out a lot of people in gold, or is this just pure desperation? I don't know if you're seeing anything like that in the gold and silver markets, because that would be fascinating if you do.
Well, Rafi, before you answer that, I just want to translate some of what Tom said for those that don't have his insight and knowledge into the money markets, like myself. I'm learning, right? Which is essentially, Tom, what you're saying is that the big players in the oil markets are making it go up and down lots and lots and lots and lots, and it's shaking.
Remember, we have computers trading these markets, not humans, so they can key the algorithms to go to overcorrect in one direction versus undercorrect in the other direction, depending on the headlines that the algorithms read in the press. The press writes blatantly false headlines with the right keywords in them to get the algorithms to go ballistic. Craig Hemke and I talked about this in my podcast, and Craig's Turk Ferguson. Craig Hemke is another long-suffering gold futures trader, right? And built an entire, I think, entire very solid business trying to explain the inner workings of the gold market to people. So Craig and I talked about this, a couple of months ago, and it's just since then I've just been watching it in the oil markets. So what happens is, because to play in the futures market, you're always leveraged because you post X amount of collateral versus your position. If the market moves against your bet, regardless of whether or not 2 hours from now your bet's going to be right, you can get margin called out because your collateral gets eaten up. And you either have to post collateral or get forcibly washed out of the market. At least on a day-to-day basis, but maybe not on an hourly basis. Do you understand what I mean?
Yep.
That's what I mean by volatility washing. You're washing these guys out of the market by forcing them in and out of their positions based on egregious volatility. And before Russia invaded Ukraine, the oil chart is clear. Like volatility in oil is tripled on a weekly basis, tripled in the oil markets, in the Brent crude markets. I don't care much about WTI. I usually just watch Brent, but.
Yep.
Roughly. Give you an idea. So sorry, Rafi. Go ahead.
There's two things. It's okay. There's you focus on very different aspects of me, so I'm learning a lot also. So if we're going to go back to the COMEX on open interest, there's three things that I'm seeing there. First of all, there's I don't know if I'm able to share here. Can I?
Let me give you permission. Hold on a second.
Okay. Well, while you're getting that fixed, the thing that I want to share. Oh, now I can. Okay, I'm clicking it. Let's right here. Okay, so this is from Gold Charts R Us. So the end of this chart here, where I'm making a little rectangle with my little plus magnifying glass here. This is the gold price. It was at like 1620 over here. Now it's up to about 1700. Doesn't count today's drop to 1670, but let's just take this. We have about a rise of 1620 to 1700, and a corresponding fall in open interest from looks like 470,000 to 433,000. So it means contracts were closed and the price went up. So that's technically a short squeeze. It's not a big short squeeze, but that's what happened. And I also can tell you that that I subscribe to some market historians. Just a few ones that have the right fundamentals. They understand what money is. They're not just purely looking at chart patterns, but they trade the futures. And a lot of them have been knocked out and they have no idea what's going on. Their systems aren't working and they're just getting frustrated and they're bowing out, wisely because their systems aren't working. And that's okay. But look, fundamentally, I'm not worried about the gold traders. Yeah, that's gold derivatives traders, futures traders that are playing liquidity games. I don't care if they get knocked out. It's only going to affect me, very temporarily or in the very short term. I'm a stacker. That's what I do, and I guide stacker. And the futures traders, they're going to affect us, but I'm not going to go running to a bullion dealer and saying, "Oh, buy my coins because gold went down $30 today." I don't care. And if I'm in a liquidity crunch and I need money to pay my bills, yeah, it's a different issue. But that's nothing to do with the daily movements of gold or silver or whatever.
Right.
And finally, the other thing that I've noticed is that the COMEX. Let me just try to hold on. I'm going to
actually one more thing before you go any further. I was going to say the entire chart that you put up was fascinating because open interest on the COMEX has dropped. Was that a weekly chart or a daily chart?
That was a 6-month chart, so it was daily. It was daily going out daily. 6 months.
Look at the open interest on the COMEX in general. It's down from around 580 to 600,000 contracts down into the 430s.
Yeah.
That's exactly what I was talking about.
It's very down. It's way down. Yeah.
No, that's exactly what I was talking about, which is that there's less. And the point I was trying to make was that once there's no liquidity in the market, once there's not a lot of open interest, it's easier to actually get whipsaws because large players can move the market against, easily because there's no open interest, there's no liquidity. And then the bid-ask spread starts to rise and blah, blah, blah. So we're seeing it in Bitcoin.
This is the second thing I wanted to share. I put this on the Endgame Investor last week, and this is the total transparent. Do you see it here? Am I sharing?
Yeah.
Okay. This is the total transparent silver holdings for all funds. It includes down here. You can see all of them: COMEX, TOCOM, CF. I don't know what half these things are. SLV, Gold Money. So some of them I know, some of them I don't. But it's all the stored silver that we know that supposedly backs all the paper funds in the world that we know about. And if you see here, in 2020, we had a huge influx, which means that a lot of people were buying paper silver and investing in these funds, expecting Armageddon, the end of the world. And now all this silver is leaving. We've lost 165 million ounces in 2022 year to date, and that is by far a record. I mean, the silver is draining like never before. And on the LBMA, it's also draining. And I can go really quickly to that. The LBMA here, I have it bookmarked. Should load in a second. But we're seeing this the physical metal leaving the storehouses because the price is so low, and the futures traders are messing up the price, and that's okay. Let them do it. Let's see here. We see silver. Oh, this is LBMA. Look at the silver supply. It was at 1.18 billion.
Yep.
And now it's down to 871 million. It's really draining.
Yeah, no, and it's really fascinating because we go all the way back to, I mean, some legendary stuff in the gold and silver markets. We go back to the old posts on the FOA from 20 years ago, talking about the end of the paper gold and silver trade. That at some point they're going to drain the LBMA and or the COMEX, and then the paper price is going to go to zero, and the physical price is going to go to AIDA. And it's at that moment is then where we're going to transition from a paper market as the price setter to a physical market being the price setter. Right now, the physical market is the price taker in gold and silver, and has been for years. And for the most part, even in oil and other commodities, this is how they've kept. This is how the markets have become the way they are, and why the people who, in my mind, are attempting to destroy the world or take over the world have been funding and keeping their power base in play by over financializing these incredibly important markets, and then leaving the primary producers on a cost plus business model, and they take all the vig in between. Mm-hmm. They take all the real profit. And the gold miners it's always been that. It used to be worse in the gold industry when the only form of bank financing they could get was non-recourse loans, to go back 15, 18 years ago. Today, you've got instruments like Wheaton Precious Metals and Franco-Nevada and all these royalty companies, Royal Gold and whatnot. They act as the banking system for the gold and silver markets, so that they put the upfront capital for the exploration and development, and then they take a piece of the back end for their initial investment, as opposed to going to the bank, having to go to the bank for a 10% loan, and the bank then trading against that position and destroying the cap table of the mining company. Like this is just that's classic stuff in the gold market. Thankfully, the gold market and the precious metals market has actually shifted away from that old business model years ago, and now it's a much healthier investing environment for new production. But now to do that, now we just suppress the price so that these guys when they finally do make a mine, build a mine, they don't make any money because they keep the price right above the extraction level. So we're talking, like what's the average cost to pull an ounce of gold out of the ground at $95 a barrel oil? If you think it's $1,000, you're nuts. For most producers, it's $1,500. Mm-hmm. Yep. Especially after their oil hedging, which they're usually hedged out in time about 6 months. If the price of oil jumps a lot, you won't see it in their earnings report for 2 quarters. But then it'll start. Then the energy costs will start showing up in their. And you can play all that. You can play all those timelines. It's crazy. So I don't recommend people. I don't recommend anybody. I don't recommend that to people. I just try and teach them the structure of these markets, and then let them do what and then pass them off to somebody who is going to give them real trading advice. That's not what I do.
Okay, Rafi.
Yeah.
What anything you want to say about what Thomas said, or as we develop this conversation? And at some point, I do want to link it back to what's happening in Europe and Ukraine and Russia, and how it might roll out with the physical market in the physical exchange in Shanghai, and also the proposed physical gold exchange in Moscow. Okay.
So there is something I can say to try to link all this up. I saw this Bloomberg article, it was 2 days ago, that I think the LME, the London Metal Exchange, the base metal futures, the one where the nickel fiasco happened in March, they're contemplating banning all Russian base metals from backing contracts in the LME. So I mean, that's about 10% of the world's base metals, and they're thinking of just like saying Russia can't be part of the LME anymore. So then their theory is that if they do that, they'll save themselves because nobody wants Russian metal. But maybe that's true. but like still effectively, if you ban if you like theoretically, if you take the extreme of this example and let's say the LME says we're going to ban all metal from our storage and nobody can put base metals in our exchange anymore at all, then what happens to the paper contracts? Well, the answer is they become completely irrelevant. So what sets the price if the LME bans all physical metals from their storehouses? Then the physical market takes over and just ignores the LME because it doesn't matter anymore. So if you're going to do something less extreme and ban 10% of the metal because it's from Russia, then the paper price is just going to become less relevant, and the physical premiums are going to go up. And you'll see, the physical market is slowly but surely going to take over the paper markets, and you're seeing that in silver premiums and physical silver premiums, which are 40% now, which is the 2008 record high for junk silver. You're seeing it in gold, which I think Krugerrands and Buffaloes went from like 3% to like 6% last month, just suddenly jumping. It must have been some kind of rumor. But yeah, the physical markets haven't taken control yet, but they're on the way and they're getting stronger. And eventually, paper markets are going to be completely irrelevant. And how many dollars you can make trading stupid gold futures is not going to matter because you can't buy anything with them.
Yep,
right.
no, actually,
Tom, hold on a second. Tom, hold on a second. Before you respond, just a few things. By base metals, which metals are you referring to? Like copper, nickel?
Nickel, copper, molybdenum, I think. So, things like that.
Aluminum, lead.
Yeah, so things that are used in industrial production. So the LME thinks that if we don't hold them, then Russia won't be able to sell them to anybody, and because nobody in the world needs copper or lead or aluminum.
No, Rich, let's go back to the beginning. What's the primary use of a commodities future market? To coordinate production and supply and demand through time. I'm a consumer. I'm an aluminum smelter. I'm going to need X number of tons of aluminum 6 months from now. I want to lock in some predictability in the price I'm going to pay by buying X number of months out into the future. You destroy the structure of that market. You destroy any ability of these commodity markets to produce and coordinate their supply through time and place. It's literally an attack on the structure of all of these markets. It's no different than going in and paying farmers not to farm. It's no different than blowing up food processing plants or pipelines. It's exactly the same thing. Yeah. Okay? So the LME coming out and saying that is a classic example of what will happen is, of course, what Rafi said is right, but then the opposite side of that is that what's stopping Dubai or Moscow or Shanghai or Singapore or anybody else from starting up their own exchanges if they've got the liquidity and they've got the backers and everybody and everything else. Yeah, now that's what's going to happen over the course of the next 15 years. All that business that used to go through the city of London is going to flow into other. Is going to flow into other markets.
Yeah. Now, listening to Rafi and as a lay person, right? It occurred to me like another of those, we're going to get Russia by freezing ourselves to death. Then Russia will be sorry. We're going to get Russia. We're going to show Russia by denying ourselves their fertilizer to grow food for ourselves. It's oh my God! I can't. It is vandalism. Like you said.
And then when the Russians actually give the West their PR cookie by saying yes, the Ukrainians can ship and export grains out through Odessa. What comes out in the last 24 hours? The Russians proving flat out that the Ukrainians are the boats that are bringing in stuff into Odessa isn't stuff that the Ukrainians need. It's weapons. So they're using the Ukrainian grain trade through the port of Odessa to move NATO weapons into Ukraine to fight the Russians. And the Russians are like, that's enough of that shit. And they started bombing. And that's part of it. And Odessa was absolutely targeted this morning, including military installations on the border with Moldova, because again, Romania and Moldova are doing military exercises on the border near Odessa, because obviously the Russian enclave of Transnistria with the 20,000 troops that are there, they're planning on overrunning that. They're just trying to mass up on the border before we go to a hot kinetic war. The question is whether or not Putin's going to give them the casus belli. And Moldova even came out this morning and tried to play that game by saying 3 of your caliber missiles passed over our airspace. Oh, by the way, so that came out this morning too. Of course Moldova said that because Moldova is a Soros-backed regime in Moldova trying to come up with some excuse to go, Article 5, NATO, come in and save us, and claim the moral high ground. What else is new? Brits have been trying to do this for 7 months, guys.
Yeah, so basically what we
Every
said at
other
the beginning,
day.
nothing's happening in the world. It's all boring.
Exactly, my friend.
Rafi, I don't know how much you follow what's going on in Ukraine, Russia, and Europe, and the larger markets there. Any comment you want to make, and how you see this might be rolling out?
Between Ukraine and Russia,
and how it's going to affect the money markets.
Money markets with Russia. Well, the one thing I do understand, I always go back to the monetary focus, because I try to not comment too much on war and geopolitics, other than just I know that inflation and war go together. They're both theft. Governments steal money to go to war, and inflation is stealing money, so they're just gonna have to steal money faster. That's what happens. But if Russia's monetary policy of the past, since about 2000, since gold bottomed in 2000, if the numbers on trading economics are right, and they've been stockpiling gold ever since, and basically keeping their gold supply in line with their money supply, which functional means they're on a gold standard. They never announce it or anything, but if you're going to expand your gold reserves at the same rate that you're expanding your ruble supply, you're backing your currency 100% with gold. Just that's what you're doing. And really, all Russia would have to do is say, the ruble is exchangeable for a certain amount. And I know some people on our side say this isn't possible. I think it's possible, because all you need to do is have people believe that there is 100% backing, and it should work. That's what a gold standard is. You don't actually need the metal. You just need the metal as a measure. But yeah, eventually people steal from that, and it doesn't work. So it wouldn't last forever, but it would pull the rug out from the dollar. And does Putin really understand that? I'm not sure, but the market will organize it in some way, and it'll come to that anyway.
I believe that. I can tell you flat out that I absolutely believe, having studied Putin for 10 years, that he does understand this. The structure he would implement would be similar to what China has done with the yuan, which is to have an onshore yuan and an offshore yuan. Eventually, the Chinese are going to also let everybody know exactly how much gold they actually have, which is far more than what they say they have. And then effectively, the onshore yuan would be convertible to gold, but the offshore yuan would not. In the same way that the same thing's going to happen with the ruble, I think, is where Russia goes with this. And again, the rumor is, and I believe the rumor is, that look, the official gold holdings of and nothing you said, by the way, Rob, I disagree at all. You're absolutely right. What I would say is to remind everybody that Russia has kept their gold holdings in their FX reserves as around 20% of M2, which is very high. Okay, and that's about the level that countries usually get, and then they stop accumulating gold. So, and when the Russians were at that point about a year and a half ago, that's what happened. Then they had to inflate in order to deal with the war and everything else. And now they're just buying more gold. And both Russia and China, between them, produce about 600 tons of gold a year domestically. None of that leaves not much of it leaves the actual market. Like some of it winds up at Swiss refiners and the LBMA and whatnot, but none of it leaves China. Not an ounce. So it's all being bought up domestically and whatnot. So yes, they're going to move towards a gold convertibility for their local currency at some point in the future. But they're not going to do so until they need to. And the bigger question is, when is the day that's going to come that the Fed needs a higher gold price? Everybody who's struggling with no dollars right now needs a higher gold price that has any gold reserves. In my mind, the block that needs a higher gold price to offset its impending sovereign debt crisis is the European Union. They've got vast gold reserves across all of the EU 27 member countries, something like about 12, 13,000 tons of gold. And a low gold price hurts them as German debt falls in price, as Italian debt falls in price and rises in yield. And they've got all this stuff nominally on their balance sheet. Go look at the ECB's balance sheet. 80% of it is made up of European sovereign debt.
That sounds
So
stable.
if that collapses in price by 40%, their ECB's effective mark-to-market balance sheet has dropped by 35%. So they need a higher gold price to offset. They need a higher gold price to offset. That's part of what
Yeah,
Basel III was all.
That's I guess one way to look at it. I say basically the same thing you're saying from
Yeah.
just looking at the same thing from a different angle. I mean, one of the guys that I really I don't look up to many people. I look across at them because we're all looking at the same thing, and we're like getting it from different angles. But one guy that I look up to is Daniel Oliver of Mermacan Capital, because his knowledge of monetary history is just, it's the best that I've ever seen, except for maybe Murray Rothbard himself. And what Daniel Oliver says of Mermacan is that, yeah, you're talking about who needs a higher gold price, but in basically from 1978 to 1980, you know, what was happening was that the market was forcing, as the Fed was hiking and killing the value of the paper on its balance sheet, the market was forcing gold higher and higher and saying we have no faith in these bonds, and the amount of gold on the Fed's balance sheet was rising as a percentage of the dollars on the balance sheet to about 130% coverage, which is like way beyond. You know, it means we're totally lost in faith in the dollar. And so he's saying we didn't. It's not that we instituted a gold standard or that it was instituted from top down in 1980. It was that the free market was forcing the dollar onto a gold standard in 1980 because it had no faith in the bonds, until price inflation finally cooled down, and it was almost dollar Armageddon in January 1980. It was almost there. It was like this time we're gonna hit it.
No, I 100% agree with you, except that I think that the Fed may have a way out of it.
You think the Fed has a way out?
I do.
What is it?
What is that?
Well, if they're going to they have to let the dollar. They have to let the dollar rise in value relative to all the other currencies, right? And eventually, they're going to let the gold price start to rise because the free market's going to take over. Either we drain the paper market, as we've already discussed, right? They have to allow interest rates to rise in order to attract capital. The rising dollar is also going to create, it's going to mitigate some of the effect of that. And the dollar liabilities, we can throw gold out onto the yield curve. Judy Shelton, when she was under consideration to become part of the FOMC, which, by the way, John McCain and Kamala Harris both fist bumped when they blocked her nomination to the Federal Reserve Board. Judy Shelton is an old gold buff. She let it slip in a podcast with Grant Williams about 6 months ago that when Trump and Mnuchin were talking about 50 and 100-year bonds, remember that early in the Trump presidency? Well, maybe we'll just issue 50 and 100-year bonds in order to be able to roll out some of the debt and keep the servicing costs low, right? Especially while interest rates are at zero. The part they didn't talk about was what Judy Shelton let slip, was that they were talking about issuing those bonds with some percentage, probably 5%, gold redemption clause. Meaning at the end of the bond, when the bond is paid back, you're going to get 5%. You have the option of getting 5% of your capital back in Treasury gold. Now, if you do that, then the Fed is actually incentivized to allow the price of gold to rise because they can issue those 50, 100-year bonds at like a 2% nominal dollar yield, and then if they allow the gold price to rise, the investors will get paid back on the back end. And that's the brilliant strategy. And if the Fed doesn't do it, the Russians and/or the Chinese and/or the Indians will do it. Someone's going to do it, and then the Fed will have to follow suit. So at some point, the Fed will want a higher gold price in order to deal with this, because at some point, and very soon, remember, in the middle of 2023, there's a massive debt rollover that the United States is facing. Was it 20% of outstanding debt has to be rolled over next year? Something like some crazy amount has to be rolled over next year. So, and it's going to be rolled out at higher rates because the Fed has raised interest rates. And I think the Fed's not going to stop raising interest rates until they've broken the ECB. Well, my honest opinion. So if you think of it, in those terms, that's the way out. And that's the way you deal with the unfunded liabilities. But you also have to engender a political revolt here at home, which stops the spending. And we have to go back to 2019 or 2018 spending levels, or 2017 spending, or pre-Trump spending levels. Cut 15% from the federal budget. which we could do, and then and to deal with the rising debt servicing costs that'll happen in the interim. But it has to come with a concomitant political revolution here in the U.S. I don't know that we have the stomach for it, but that's the way out. Now, whether it's going to happen or not, hey, I'm throwing darts at the dart.
My response to that is that, okay, so you're talking about a way that they could do it, and yeah, if A leads to B and B leads to C and this happens, then there's a way out. Except my problem is, and where I think they get stuck, is that when they do this and they go on this plan to try to restore faith in the monetary system, or however you want to call, in a sense, what you just described. At some point, they're going to end up in a 2008 situation where all the banks are like, you've got to reverse course right now, or we're all going to collapse, and the entire pyramid that we've been building since 1971 is going to come toppling in on itself. It's sort of like you're describing, like, okay, so they're building the Tower of Babel, and they're building, and they're on floor 1000, and then they just decide to like slow down and keep the tower. But that's not how I see it happening. I don't see that these people are that smart. That they know exactly what they're doing. They just seem to me to be haphazardly keep building, layer on layer of the pyramid, and eventually it's just going to fall over because there's nothing they can do. Maybe you're right. I don't know. But to me, it just seems like they're idiots.
I presented that to you because I know that you probably hadn't heard it before. I've been talking about this for months. One other thing I want to point out. That this is, again, I don't expect. I would not expect all of that to I expect pushback from this. I always do. So, and healthfully, it's all healthy. It's all good. I'm not, in no way, manner, shape, or form do I consider this confrontational. I don't. This is not. This is just analysis.
Sure.
So the next phase of that is to say you're correct, but here's the thing. In 2008, it was a domestic creation of the domestic housing. Now, I'm not saying that the United States isn't going to get there. As George C. Scott put it in Dr. Strangelove, I thought, you're not going to get our hair mussed. Like, it's not like we're not going to have to go through a credit deflationary event. It's not like we're not going to, I look at Extra's pyramid and I go, little teeny amount of gold value, big, huge derivative pile. So asset values have to come down, gold has to rise, but I don't see a complete flip of the port. I don't see happening. I think they can manage this. I think you can get 50% credit deflation and a 7 or a 10x rise in the price of gold, as opposed to 90% credit deflation and a 50x move in the price of gold. I think there's that's when I say there's a way out of this. I'm talking about something along those lines. Like, there's no doubt in my mind that gold is going to have to go to $12,000-$15,000 or whatever the number is. Could be 20, could be 25, could be 7. It depends. What's important is that, and this as well. I know everybody understands that markets don't move on fundamentals. They move on momentum and sentiment, and they move on where capital is treated best, even if it's not treated well. We Austrians, the two of us in this room are both Austrians. We both think capital is treated like crap. Mm-hmm. Like, that's why that's the system. That's our fundamental criticism of the market. But the market is always going to respond in real time to where it's treated best. And it doesn't mean that that's good, just best. And that's where the marginal flows are going to happen. If the United States were to tell the world, we're going to pull everything back, we're going to try and restore confidence, and we're going to get control of the corruption on Capitol Hill, and fix the balance sheet bubble of the country, stop it trying to engage in world wars and all the rest of it. Again, as of right now, today, that whole idea sounds insane given where we are right now.
Mm-hmm. Okay.
But here's the thing. The difference between 2008 and every other banking crisis since 2008, we've had a bunch of them, 2011, 2015, 2019, whatnot. Those are all meltdown scenarios. In every one of those, U.S. banking debt and U.S. debt was all tied to LIBOR. It's not tied to LIBOR anymore. It's tied to SOFR. And SOFR is a different indexing rate. It's a domestic indexing rate, and it's a secured indexing rate for debt. Whereas in Europe, so that means that if the European banks catch a cold, it's not going to translate over to your credit card bill, because your credit card is no longer indexed to LIBOR. It's indexed to SOFR. It's a big shift in the market that no one wants to, that everybody who's been in this thing predicting Armageddon, including myself, for an awfully long time has not been able to process yet. That there has been a break in the link between offshore dollar markets and onshore dollar markets. And that link is SOFR. And the liquidity in SOFR is rising exponentially as domestic banks have moved into that market on a daily basis, because LIBOR and indexing of all debt to LIBOR will all be canceled by the middle of June next year. And as of the beginning of this year, all new debt in the United States has to be indexed to SOFR, not LIBOR. Only legacy debt, and all legacy debt that's still indexed to LIBOR at the end of 2023, end of June of 2023, got news for you. They're already telling you, like, you won't be able to reindex the debt.
Okay,
because the market will be dead. Because the U.S. LIBOR market is going to be done. The U.S. dollar LIBOR market is going to be basically drained of all liquidity by that.
So I think I understand our different perspectives. Mm-hmm. We have the same conclusion, but we look from opposite directions, and that's perfectly fine. So now let me tell you where I'm going to reflect back what you said. From what I understood. Okay, so yeah, so the market puts capital where it's treated best. Yeah, that's true, and it's treated like crap everywhere. Yeah, that's true. But you're speaking, I think, entirely from the perspective of the financial puppet masters of the universe that have control of huge portions of capital, and they use SOFR or they use LIBOR and these financial terms, which I do understand, but I don't like spin these around in my head as fast as you do. I always go back to the public, because who's the ultimate holder of last resort of capital is the public. So when all these financial puppet masters of the universe, whether they be central bank honchos or the CEO of JP Morgan or commercial banks or whoever it is, IMF, I don't know, whatever they are, and whatever buttons they can push, when my thesis is they will lose control, and the financial paper they use to represent all the capital of the world will just lose all value. And that's when you have a public run on the currency, which is a hyperinflationary collapse. And everyone and each individual of the public says, yeah, you're treating capital like crap. They're not going to use those words because they don't know what that means, and they don't know what SOFR means, and they don't even have no idea what LIBOR even is. But they're going to say, I'm losing my purchasing power. I'm getting rid of all of this financial paper. And because the currency, the currency unit is like the second layer of Exter's pyramid, they just push off the rest of the pyramid. And what you have left is just gold and a bunch of garbage paper. And that's where you have your new exchange rate. And then all the people that control the market today, they have no power anymore. So it doesn't matter what they do, LIBOR or SOFR or whatever. It's all worthless.
Well, I agree to a certain extent. I just don't think it's going to be that catastrophic.
Okay.
I agree that that process is what we're going to go through. I just believe that all of these things are processes, not step functions. Because I've been here, I've been doing this way too long to see. Because every time I think there's going to be a step function where we're going to wake up one morning and the old world's not going to exist anymore. It never works that way. I mean, I know that's what they want to do. They want to have a great reset where they close down the markets, and then a month later everything reopens, and we all have to accept CBDCs, and we're not allowed to buy pizzas because we're fat and all this stuff. I know that's what they want to do. Like what I'm saying is that what they're actually doing is laying the foundations have actually already been laid to bifurcate these markets in some ways and to protect themselves. Okay, they're trying to protect themselves with these things, but at the same time, like, there are big forces that move the look. It's like everything else. If you change the incentive structure, right, then the family offices will be moving their money other places. That's where the bulk of real capital moves, is in the family offices and the high net worth investors and what. That's where the real capital moves, right? And those capital flows are always picked up, and you can see them happen. And that's what we have to deal with. And I'm not saying that we're going to get out of this without, that there's not going to be a really bad inflationary event for the United States or for the world. We're already going through the beginnings of it, right? But the U.S. is going to be the last one to collapse, and the U.S. is probably going to collapse in that respect, in the way you described. Potentially, what I'm offering is if they can see that, and they've laid out certain infrastructure, then we could actually mitigate the worst of what we're talking about. Because let's not kid ourselves, a 90% collapse of Exter's pyramid is Mad Max. Okay, I don't want to go there, and I don't think anybody else who's a rational actor wants to go there. I'd like to be proven right, but I don't want to be right at the expense of having to say, yeah, well, that was nuclear Armageddon. It was effectively monetary nuclear Armageddon. And again, I'm not, by laying it out this way, what we're actually seeing is a return of some form of monetary sovereignty. It's just not complete monetary sovereignty. I don't think we're going to get a 100% reset back to a full 100% gold standard, a la Murray Rothbard, without fractional reserve banking and all the rest of it. Is that what I want? Absolutely. Is that what I think I'm going to get? Absolutely not. And I'm just being a realist and a pragmatist about this, because there's just too many competing incentive structures for that to not happen. And I think that the equilibrium point of this is going to be something less catastrophic than, frankly, the many in the gold industry are willing to admit at this point. And I think some of that is I'm not accusing you of this, because I'm actually not accusing you of this at all, of running their own, of talking their own book, and wanting to be right, the frustration of watching the system limp along far longer than anybody thought they could keep it limping along. And that's just where we are. And I'm out of that mode. I'm purely into pragmatic, not the world I want, the world I got mode.
Yeah,
and that's where I am.
Rafi?
Oh yeah. So I just want to clear up one thing. I see where you're coming from now, and I hope you're wrong. I hope you're wrong, because I don't want to be limping along for another 10 to 20 years. But I'm sure, like, if I'm right, I'm sure you're protected. But I want to just it can seem like, the way that I talk about things and the way that I think, it seems that I'm a pessimist and that I'm predicting Mad Max. But I'm actually not. I think Rothbard described hyperinflation as the final defense against inflationary theft. And the way that maybe I'm trying to calm myself or drug myself or convince, but I have to think that everything will be okay, or else I just won't wake up in the morning and take care of my family. So I'm forced into optimism because I'm not a suicidal person, and I don't plan on going there. So,
Rafi,
I mean, what? Yeah.
If I may go, no, I agree. We have to believe. We have to believe there's a way out of this mess. And in a moment, if you finish, I just want to give a brief synopsis of my understanding of Tom's overarching thesis, and then I think it's time for us to finish up. So, do you want to finish what you're about to say?
Yeah. So just simply, like, the way I maintain optimism, besides faith in God, which is at the core of me, and that's a personal choice. The way I see it is that when you have a financial reset, it's not like power plants are blown up. It's not like, all of a sudden there's no oil to dig up. All of a sudden, all the physical resources in the world are pretty much the same, minus, war. There might be some kind of little bit of war. But basically all the physical resources are here. It's just we organize them so wrong, and now we have to figure out who owns them and start again from there. And that's going to take some time. It would take about a year if no government's involved. The problem is, if governments get involved and they still have some amount of power, it could take a long time. So I'm hoping for a complete governmental collapse, and I don't see Mad Max because I have faith in humanity, and maybe that's just naive, but that's how I see it, and I'm optimistic. That's all.
Very well. You're okay where you are in Israel. In Britain and Europe, I think is a different scenario, especially with the winter coming, right? Tom?
Before you try to remember, also, I'm also an optimist at the table. You got to remember that putting all these pieces together is only coming from an intense desire to see if there is actually anybody out there, if there are factions that are looking at this going, okay, this is a way out that does not require the worst possible outcome. And I mean this sincerely, because when you really stop to think about how tenuous our supply chains are of basic infrastructure, when I look, there are how many Gen 1 nuclear power plants in this country that have whose access to diesel fuel is the only thing keeping us from North America being completely overwhelmed when those things melt down, and we have Fukushima 25 times? Because that's what happened to Fukushima. Like, the cooling rod pools couldn't get diesel to run the generators to keep the pools that the cooling rods are sitting in. That's the thing that, when I say Mad Max, that's what I mean by Mad Max. Okay, I mean that we're so close at a physical infrastructure level to things just completely collapsing. Okay, because it's really, Jordan Peterson makes the point all the time. I wake up in the morning and it's a miracle that there's lights on in my house, right? because there are men willing to go out there and climb telephone poles to climb power poles to restring to keep these things, to keep all these systems running. And the amount of malinvestment that we all see is so endemic, it's so enormous that these systems are all teetering on real, honest to God collapse. Like, and the incentives of various players and their power centers and their bailiwicks are so they're so freaking desperate and so freaking worried about losing power and losing potency that they're willing to, that when they're backed into a corner, they're going to do anything. And if you don't think that that's not what we're seeing in Ukraine, that's what we're seeing in Ukraine. And from a geopolitical perspective, that's the way I see their psychosis playing out in real time. Now the question is, are there other people who see the exact same thing I do and are attempting to figure out ways to stop all of that? And if the worst thing we have to go through is a credit deflationary environment for 4 or 5 years that mirrors the 1970s or the 1930s, and there's a big margin call on the U.S. government's balance sheet, and a force of a reset of the price of the gold on the Fed's balance sheet back to what you talked about at the beginning, talked about earlier, moving it to, to 130% of the value of the debt on the balance sheet. Well, fine, I'm okay with that. The world didn't end when Volcker raised interest rates to 21% and gold went from $35 an ounce or $100 an ounce to $880, and we were on the verge of dollar Armageddon. Like, it's possible. Today, the numbers are higher, but the structure of the market is different today than it was then. The Fed has different tools. The people who are running the Fed have different tools, and they're fighting a different fight. And that's what I've tried to identify. And that's what I've been trying to communicate today, and I've been trying to communicate for months. And I don't know if I'm right or not, but every day I seem to be righter than I was the day before. And so I wanted to have this talk in some ways to help make this, real to another corner of the same market of commentary that I'm already operating in the first place. Because if I can even half convince you that I'm right, well, then you'll go back and go, wow, that's really interesting. And he's a lunatic, but he may be right. And that would be cool. And then we have communication. And that's the only way we're going to get out of this.
And
okay, I'm done.
Tom's thesis, I find optimistic, and this is my understanding of it, right? And then I want us to finish up, which is that the banks that own the New York Fed, not all of them, but most of them, are hostile to the WEF's Great Reset. Goldman Sachs and JP Morgan do not want to give up commercial banking so that Klaus Schwab can have central bank digital currencies and cut them out. So what they're doing is they're raising interest rates deliberately in order to destroy the ECB, to have capital flow from Europe and destroy the WEF source of funding. Those European elites that are out to depopulate all of us by injecting us with this toxic poison and destroying the supply chains and everything else that they're doing to get us so that we can own nothing. They'll own everything. We can eat bugs, and they won't be kosher or halal, but we'll just have to be happy with that, and they'll own everything. And so they've separated from LIBOR. They've set up SOFR. Capital is draining. The euro and the pound are falling because everybody's buying dollars and everybody's screaming, will the Fed pivot? And the Fed is not interested in pivoting, because for the Fed, it's a matter of their survival. So you got a group of gangsters, the Federal Reserve, in a turf war with this other group of gangsters, the WEF, who own and have captured the ECB and the EU. And there's this other group of gangsters on the other side, Russia and China, these other gangsters that don't want to get involved but don't want to get hurt either. That's overall. Tom, you're on mute. Anything you want to say about that, Rafi?
Sure. Well, okay, so maybe as quickly as possible, maybe there are these there's this huge game of chess going on, and I'll just concede that it's going on. Even if it's going on, everything you're saying is right. I don't think that the power ultimately rests in these huge financial interests in these turf wars. I think the power is ultimately held in.
Oh, Rafi, you've frozen.
In the end, what?
So you froze then. Ultimately, you think the power is is held by
ultimately the power is in the hands of the public, and they're the ones that will rebel against the derivatives of all these gangsters. And to close on a biblical note, again, it's the holiday of the Feast of Tabernacles here in Israel and for Jews around the world, and that is the holiday. If you look in the end of the book of Zechariah, maybe you call it, it's about a giant war where everyone brings their gold and silver to Jerusalem and dukes it out. And it's figurative. I don't know exactly what it means, but it's supposed to happen on Sukkot, on the Feast of Tabernacles. Maybe it's happening now. Probably not. Who knows? But it's interesting, and the world is as boring as ever.
That's right.
And I agree. And I agree with you, Rafi. We ultimately have the power. So my point is, we do not give into despair. We try to understand the parameters of the game that's being played around us. We are, while the giants fight, they're eventually going to knock each other out. And if we can avoid being stepped on, we're the next generation of giants.
Yep.
Okay.
And what there is for us to do is to keep stacking gold, keep stacking silver. And Rafi and I have talked about this. We don't agree, right? But that's fine. You stack gold, silver, and stack Bitcoin and privacy.
Stack sats because you need movable capital in a world where capital controls are coming.
Yeah.
And it's, and I'm a big fan of both. I've been telling people I'm agnostic on this. You should own some gold, you should own some Bitcoin. And right now, since this is the big bull market, you should own dollars. And it may be anathema to you, and you may not like it, but own some dollars, because I'm not saying you should, but with gold below $1,700 an ounce, you're an idiot if you're not buying. Like I said, I bought some this morning before we hit record.
Yep. Okay. Rafi, Tom, thank you both very, very much. I look forward to having you on again my channel at some point in the future. If you're watching this, you have any comments or questions, put them in the description below. Oh, by the way, I forgot to say at the beginning, if you're going to watch this on YouTube, you're not going to see the whole thing. So you should follow me on Odyssey, where I post most of my material, all my material, and I post most of my material on FreeSpeak, which is also a censorship-resistant platform. Thank you, guys. Much, much appreciated. And between now and when I see you next, please keep filling your pockets with gold, silver, and Bitcoin. This is gold Tom, and silver Rafi, and Crypto Rich signing out. All the best. Bye-bye.
All right.